Hey there. Subscribe to my channel. And also press this bell icon.
In today's video, we will see a highly accurate reversible trading strategy from where, when a market is giving a trending move, how to short it from its high so that we can generate a good risk reward. This will be today's video. In this, there will be a total of 8 rules which you have to follow. You have to see these rules like a checkpoint where you will not skip any rule. Here, we will take help of an indicator which will tell us the price action. All the indicators are lagging, but if you are a good trader, you can find the right price action and make your trades. One such indicator is VWAP. VWAP means volume weighted average price. Here, your volume matters a lot, and we know that volume is the main fuel in the stock market. No matter how the price is moving, if there is no volume, no matter how big the candle is, no matter how big the rejection candle is or how big the trending move is, you cannot trust it. That's why we give importance to volume in every trade. And this is what today's indicator is going to do. First of all, you have to go to the indicator section. Here, in the search bar, you will type VWAP. Simply, you will get a message like this, volume weighted average price. As soon as you click on it, it will be drawn on your charts. But you will not use your default settings. Here, you have to go to its settings. After going to settings, you will see this checkpoint. You have to remove this tick. Then, you have to check hide VWAP on 1 day or above. Then, you will click on OK. After this, VWAP will appear on your charts. This indicator does not consider your previous day. Here, every new day starts with a new price point. Exactly, if we understand this, then what does it tell us? Right now, we're looking at the 5-minute time frame. And throughout trading, you should not go above 5 minutes, like 15 minutes or 30 minutes. You should never trade on this. Because in this trading strategy, you have to wait for the signal. You have to see the confirmation from the right place. So, in a 15-minute candle, you get only 25 candles. And in 25 candles, you will never be able to confirm all of this. That's why, with a total of 75 candles, your entry, SL, target, for all of this, a specific trading level can easily come out. So, if we look at 5 minutes, here, first of all, this is the first candle. So in this first candle, this line is very close to the body. In the next candle, it is a little above the body. In the third candle, it is in the middle of the body. Then in these 2 candles, it did not touch this line. So, in a total of these 5 candles, if we understand its logic and price action, then what is happening here? Your indicator tells you that at that moment, that is at that time, where are people trading and the average price. Average price means at what price everyone has traded the most. If we take an example, you have 100 rupees, I have 50 rupees. Now if we add both the money and ask how much is the average of both of you, so adding 50 and 100. Because we are 2 people, so when we divide by 2, how much will we get? 75. So 75 is our average money that we have. Similarly, in the market, there is an average trading price where the maximum quantity has been bought or sold. When you see the price after 3 to 4 candles, the direction of movement is upwards. First of all, it is known that people are trying to take it to the buying side. After that, when these 2 candles are not touching the price, it is understood that in these 3 candles, somewhere around the average price, your stock was trading. Now in these 2 candles, for the first time when they are not touching their average price, it means that there is a bullishness, a buying strength, from where no seller is able to bring this price to its average price. So this is the first thing. After that, how do we use this for our trading? We will look at our rules one by one. The first rule will be that we have to pick a trending stock. Trending stock means that after the first 5 minutes, your price should move in the same direction in the next upcoming candles for the first time. For example, this is the first candle. After this candle was trying to go below, but as soon as it goes down, buyers are getting active. This candle has a bullish closing and a seller's rejection, and buyers are getting active. How do we understand this? You can consider this like a dragonfly doji or a hammer candle where the body, which signifies a strength, is facing upwards, whereas your rejection, like wicks, shows your weakness. So weakness is facing downwards and strength is facing upwards. What do we see next? As the price is moving, rejection is facing downwards. And for the first time, rejection is facing upwards. Till now, this candle has not confirmed any trend, and it was confirmed here. After this closing, if we want to see the stock, then it should move in the upside direction as a trending move. So, the first rule is trending move, which was confirmed after this closing. In the second rule, we want the current market price to be out of the trading range. That means in tomorrow's trading session, whatever high or low the market has made, you will mark it. Here, we mark the high and then we mark the low. This was the strength of the buyer and seller till yesterday. If today's market is giving a trending move, then it is important to move out of this range. The second rule is confirmed here as it gave a closing after moving out of this range. So, whatever we have to do it outside this range. Then, we will move on to our third rule. In the third rule, we need volume breakout. If you want to trade, then trade in a stock where the participation is more than yesterday. That means people are interested. Whether they are interested in buying or selling, it is a matter of selection. Whether you are reversing for buying or selling, whatever stock you are trading, there should be a volume breakout. Volume breakout means when you compare the volumes of yesterday's trading session with the volume of today's trading session. This volume is not enough to break this volume.
If we consider this volume, for the first time, this volume is given here. It is 3.798 million. That means around 37 lakhs has been traded in these 5 minutes. Against these quantities, yesterday's volume was 3.748. This one was 3.798. So 748 to 798 is more. Here, volume has given a breakout. What do you understand? Quantities compared to yesterday's 5-minute candle has been broken here. Then next rule is volatile candles. Volatile candles means if I look at the average of yesterday's market, the highest candle with the body will be this candle, in which the body is very strong. Against this candle, if we want to trade a candle bigger than this, look at the size of this candle. If I mark this candle, how much is it? 1.14%. That means rupees 1.80. Now bigger than this candle, if we mark this candle, how much is it? Rubai 2.20. That means we have got a volatile candle here. But we don't want to look at the selling side of the volatile candle. We want to look at the positive side. If you see the trending move of the buying side, we want a candle which is bigger than rupees, 1.80. If we mark this candle, how much is it? Rubai 1.90. Then we have to find the reversal price point when the price moves. When it tries to go away from its average price, It means when people are buying it, then the average trading price should have been around it. But if the average price is going away from this candle, then it means whatever strength people are showing here, there will be a point from where people will do profit booking. You are seeing profit booking in a situation from where people are not very interested, because the people who were interested, that price point, this VWAP line, is coming from this point. So at this point, even though you can see a lot of volume, but the average trading price in the market is shifting to the lower side and the price is moving to the upside. When this happens, then the tendency of a reversal in the market increases a lot. How will this be confirmed? Gradually, the price will move to the upside. This is a trending move. This is a bullish move, and it is closing above the previous candle's high. Along with this candle broke its high and is shifted below it. This candle closed above it. For the first time when so many candles were coming with very small wicks. This is the first time where the wick is very big, which means the possibility of a selling is increasing because the sellers are getting active. But who will confirm this later? This candle closing is confirming this. But this reversal closing candle and the candle which took the market to the highest price point on a closing basis, we can see a price action between the two. What is happening here? The price is trying to create a zone. If you see, the body is creating an inside-out formation, where if I mark a zone like this from this point to this point, then isn't this zone very important for this? Because the price is facing a rejection from the top, but from the lower side, there is no such rejection from the candles. So a support, and this candle broke this support, and when it broke with a strong closing, it created a strong body to go down, where the seller strength is very strong. Now you have to see the next rule, which is entry. What do we have to see here? Before the selling, the market was moving with a buying scenario. Here, on a closing basis, we can see that this was a price where if we mark these two, then for the first time, this was the candle which wanted to go up, but the seller pushed it down. Then the same action, buyer-seller, when it came down, then where did the selling start? Here in this candle, there was a buyer, and from this same place, exactly the seller came. That means before coming to the selling side, the buyers who gave up here, that is a level where if the price creates a pullback again, then it will go back to that level and face a rejection. So this will be the level of your entry. That means this buying candle, after which the selling came, you will mark its low for entry. What is the next rule? Your SL. Where will the SL be? This high which it created on a closing basis. And when a rejection came from this place between these two, which seller was it who did not let the price go up? If the buyer is not allowed to go up, then from that place, the highest price point is the seller's territory, and your strongest seller is sitting there. And the price of that strongest seller will be at this day high. So this is the level of your entry. Now we have to shift all the things from here. Let's remove this slowly so that things become easy. Let's remove this in this price point. Let's remove this too. So after this closing, can you see once, twice, and even for the third time when the price went inside? Then what kind of a candle is this rejection creating? Is it a formation like a gravestone doji, where there is a body at the lower side and a strong rejection at the upper side? So this, you can see it's not like if you give a closing, then you won't get a chance to enter. If your trading level's right and the price section you are applying there is right, then the market will give you a good entry from there. So for this, you have to learn the price section properly. So here is your entry and this is your SL. Now it's the turn of the target. Now you can take the target in two ways. If you are a risky trader, then you can use trailing stop loss. Otherwise, it will be best for you to go according to 1:2, so that even if you get a 50% win rate, still if 5 out of 10 trades are profitable in those 5 trades, you will get a 10 risk reward, and the remaining 5 losses, you will get a -5 out of it. So if you are investing rupees, 1,000, then in the 5 profitable trades, you will get a total of 1,000 rupees. 10,000, and in the 5 losses, you will get a minus of rupees. 5,000. So you will get a profit of 5,000 rupees. 10,000 and a loss of rupees. 5,000 and the remaining rupees. 5,000 you will get in your account. So in this way, according to the risk reward, if you mark 1:2, then your 1:2 will be somewhere in this candle almost here. So the rule is that you have to keep in mind the target of 1:2 in this rule. You have to keep in mind the target of 1:2 or your VWAP line, because when the price will start moving down, then your VWAP line will also be moving somewhere. So let's touch the VWAP line, or 1:2. Whichever comes first means if your VWAP line would have been here before 1:22, and this red candle would have touched it, then you wouldn't have waited for 1:2. You would have squared off here, and you would have bought whatever you have sold here. So in this way, you have to trade with the right strategy in the market. Those who are new, do subscribe to the channel and press the bell notification